What's going on, everybody? It is January 29th, 2025, day log episode over NQ and the live stream view. So today was FOMC. A little bit interesting to see play out, especially now I'm looking at the closure of today and what we did in the aftermath. Looks like everything played out basically to what I was anticipating, and we'll talk about kind of a couple stage deliveries within FOMC. I had all of you observe during the live stream, which is very typical, and we'll go over that. But I just want to touch base on overall where the market's at right now, since we've traded lower since Monday with that massive drop lower. This liquidity void is such a large draw on liquidity. I've talked about this many times. Even on Sunday when we opened, we didn't fully collapse yet, but something where you have a liquidity void, it rarely ever stays open, and it's such an easy draw on liquidity to get to, especially if you're trading on a Monday right after a Sunday and you're close in proximity to it. It's very easy to trade because almost all the time it always trades to it, fills it in, closes it. So I'd be very, very surprised if we're going to tomorrow. I'm going to say with full confidence, at least 98% going to close in, or at least 50% of this liquidity void, if not the entirety of that liquidity void. If not, I would be very, very surprised, but I believe that's what we're going to go ahead and do tomorrow. So as far as today, if you look at the framework, a lot of people are asking me what I was looking at going into FOMC. Well, first off, you always need to have a draw on liquidity, which is a destination for price, right? You need to know where the hell you're going. And liquidity void was probably the easiest for me to really look at, because, again, that's a very strong magnet for price to get into. So when I know that's there, then it's an easy draw on liquidity. Now, on another instance, then we'd be aiming at a particular high or low on a higher time frame, right? That's where the higher time frame is trying to get towards. So that's what you need to be looking at. And if you don't know and you can't tell, which I at times can't because price is unclear and there's not enough information, then you sit still and you don't do much. That's the easiest, simplest way to put it. So looking at FOMC prior to the open of FOMC announcement, if you're looking at the 4-hour time frame, well, we're looking at this dealing range here. This bullish dealing range from this low to that high. Price is dropping down into a discount. And what's inside of that discount? Well, we have this buy side imbalance, which is inside of that discount. And beneath that is your bullish order block. So this down close candle is your bullish order block. So going into, if you go back to the live stream, everything's panning out to what I was anticipating. We're dropping down. We did drop down into that, and now we're seeing that expansion away from it, right? And we're aiming towards this liquidity void, which is the destination. If you go into the hourly time frame and you refine it, you delete that, and we'll include this just so people can see it. That's the difference with order blocks, right? On one time frame you can see one, on another you can see multiple consecutive candles. So we're seeing multiple consecutive candles on the hourly, and you're seeing a more refined imbalance on the hourly here. So that buy side imbalance, and you drag your dealing range from this low up to that high. That's discount prices reaching into that prior to the release of FOMC. So for me, that is perfect, right? On a higher time frame, prices already in a discount, primed, reacting off of a bullish PD rate to go higher. So that's perfect. And we're looking for the liquidity void, which is up here, and anything beneath that and in between, minor buy side liquidity, which is here, and even all the highs that we're getting up into and still reaching towards, those all would have been targets and partials and things we would have reached for. So if you look at lower time frames, the market on close macro got really wicked. A lot of things got wicked, and after I kind of hopped off stream. So it's one of those instances where the higher time frame, if I was a higher time frame trader, this would have been perfect. I could have had a risk reward, something like this, depending on where I would have liked to place it. But let's just say something like this, and forget this is an hourly chart. Forget this is something like that. You could be looking at this as if it's a 1-minute chart, a 5-minute chart, a 30-second chart, a 15-second chart. But knowing where you're at is very crucial, because I'm going into the session already knowing, before this all unfolded, that I'm in a discount on the hourly time frame. So what should I be looking at on a 1 minute? Well, I should be looking for displacements higher with energetic displacements, leaving me a model that would allow me to get into price. So when we go down to these lower time frames, you just do the refinement, whatever you would like to do, but I'm not going to do it for you. You refine the 30 minute, you refine the 15 minute, going into the 5 minute. I still had this imbalance highlighted, extended to the right, and that was there. Even within this, and I'm curious, excuse me, this right here, what is that pattern? For those who are studious, what is this pattern here, right? If you take all of these up close candles here and you extend them all the way to your right, just the top end of that, I know that's going to be a terrible drawing. Let's say the top of, I'm particularly picking this one because it's the biggest, beefiest up close candle in that series. If you go out to maybe a little bit different time frame, we can click through it. It's not as clear, but that is your bullish breaker that's in it. And that's within, it goes a little fractal, goes within the bullish order block as well, you see on the 4 hour. The main point is you're understanding your dealing ranges and you're understanding where you're at and where price is drawing towards overall, which is that liquidity void, which is up there. And we're seeing that off of the release of FOMC, which is in here, right about here, 1400. And I was talking about how FOMC is typically a two-stage delivery where you're looking for 1400 is the release, and 1430 to about 1440, which is about 2:30 Eastern Standard Time, or about 2:40. Right in that time zone is right when price starts to spool and starts to have some volatility in it. Sometimes it's a two-stage delivery, meaning that the first 30 minutes will do something, and then the second half will do something different, or it'll be continuation. So I executed everything perfectly, outlined the bias, everything was correct. It just so happened that you had this wicked movement after the market unclosed and everything that happened with the closure of the day. Price opens up today, and you see it trading right towards the target. Now, again, you can sit there and bitch and complain and be upset about it, or you can just say, guess what? That's trading, and that's life, and you have to move on with it. Another day, we're going to get this, and it's going to pan out perfectly. So we'll talk about briefly, again, that's the whole framework, and that's when you go in these lower time frames, people get so lost is because you're not paying attention to that framework. When I go into a 1 minute chart, I already know what I'm looking at. I already know where I'm at. When I'm in a 1 minute chart, I know that I'm at a discount down here on the hourly time frame. But if you're not looking at that, you have no idea where the hell you're at. You're just aimlessly trading random models on a 1 minute time frame. That's going to get you absolutely nowhere. And that's the issue that a lot of people have, right? Even down here, I'm not selling it short. We outlined a potential short right in here. There's a sell side imbalance. Price started to move right after the 30-minute marker. If I was not submitting to the overall idea of today, which is higher prices, then I would have been fooled into a short. But CJ, we're so close to the sell sides, relative equal lows. There's a fair value gap that's right there, right? There's a fair value gap right here. Balanced price range, we could sell it. No, because the framework and narrative is not bearish. So, and at the same time, ES is printing a lower low, which is a bullish SMT. So if that is true, then it's not going to take those lows, and I don't have to worry about those lows being even taken. So, and that's why we see this expansion higher. And the thing I was executing on was perfect. It was a perfect model. On another day, this is a perfect model. What would I call this? Well, it's a continuation model without returning into a discount. So this inefficiency here, since I already know the framework, when I'm looking at this expansion and at this leg that we're having, what is this showing? Well, it's showing that price is very much in a hurry to get somewhere. Some people are like, well, that's manipulation. It looks really manipulated. No, if price is in a hurry to get somewhere, it's not going to allow a lot of people to get into price. And it leaves this inefficiency, which is right here, which is resting within a previous new week opening gap, which is basically like a second support, second barrier for price. Even looking at something like down here, this inefficiency, I'm looking at that in the real time, and I said it during the live stream, that's a breakaway gap. I don't want price to go down there. If it's in a hurry, based off what I'm seeing in here, and how do I also know, how to trust that? And this goes for future setups and things, this type of model. if price is leaving a higher time frame discount, remember, what is the minute chart in? The minute chart's within that hourly time frame discount. So if we're down here on the hourly chart, then I know that if this 1 minute starts sprinting off, then that's okay, because the hourly, the 4 hour, the daily, that's already primed to really move quickly. If we start to see large expansions in the hourly chart, what do you expect to see in the minute chart? You're going to see huge ranges unfold. So knowing where you're at is very crucial to trust a model like this. Again, this is for the future. I know it didn't work today, quote unquote, but it's still a very solid model, whatever you want to call it, mine or whatever. And after this price, we set the limit, price dumps into that. I'm just looking at the 10 to 25% of that inefficiency. I don't need the 50%. I don't need the closure. I don't need to be perfect. And I was looking for that expansion higher like we had in here. And then guess what? Price just didn't pan out that way until after the math. So I did a great job on, if you go into the live stream, of managing a stop loss at break even and when to do that. Price was taking a whole bunch of time. I was outlining a lot of things as far as when not to move your stop loss, when to move your stop loss to break even, when price is showing you it's not willing to move towards somewhere. And ultimately, I did a great job, I think, executing and having discipline. And that's all I could have done. And after that, I mean, did price drop down lower? All of this is, to me, is really aimless kind of trading. And you can even see with market on close, this type of delivery and then everything after. I mean, it's just aimless manual intervention at the very least, I believe, towards the end of the day there. So it's still cool. Even though I wasn't a part of it, or I didn't make money, the bias in the analysis is still there. It's still working. It still did work, right? And I do believe we're going to draw up into that liquidity void, which is tomorrow. And if that's still not traded to tomorrow, that is exactly what I'm going to be trading towards. So, yeah, I think that's going to be it for tonight's video. And until tomorrow, good luck and good trading, everybody. Be safe.